Rio Tinto's initiated a monster dividend, handing something like around about £12 billion to shareholders, one of the largest payouts in UK corporate history. What's the motivation? Rio's been involved in several events recently that have tarnished the miner. Blowing up an ancient Aboriginal site was one big issue, and recently revealing widespread culture of sexual harassment. But it's in the context of a rebound in metals prices driven by an increase in demand from China, and it's clear that Rio Tinto is experiencing a really good run of potentially good profits. So is that the reason why they're handing this money back? Well, let's take a look in some more detail now. On this podcast today, I'm joined by mining analyst and partner at SP Angel, John Meyer. John, welcome. Clearly, this news comes in the context of what I was talking about at Rio Tinto, but at the same time, there does seem to be anecdotal evidence to suggest that miners are now in what could be a very interesting period in their history. What do you take away from this news today from Rio Tinto?
Yes, it's clear that enormous dividends are coming from Rio Tinto and most other mining companies. If you're a producing mining company and you've been enjoying the benefits of very high iron ore prices, copper prices, other metals through the last year, earnings are now at exceptional levels, particularly driven by iron ore, and costs were simply just not that high. So this is a year for bumper payouts.
It's ironic, isn't it? You mention iron ore particularly because of all the metals. That's one of the metals that hasn't really been performing as well as others because of the pressures seemingly brought to bear on the pricing by China. Do you see that itself being resolved soon as well? I mean, do you see further upside rather than downside for iron ore?
The Chinese government has been trying to push down the iron ore price for about 5 months now. They first started talking about it in the autumn last year, trying to talk the market down. And remember, speculation in iron ore is mainly and largely Chinese speculation through the iron ore futures in China. So although there is some overseas speculation through Singapore, most of it's Chinese speculators who ramped up the price. And the Chinese government, of course, the China Inc. is the huge consumer of China of iron ore these days. So they were kind of working against themselves, but to the huge benefit of Rio Tinto, BHP, and to some degree Anglo American, who are the main suppliers of seaborne iron ore.
So you're confident that operationally these mining companies are in a good, very sweet position so far as their outlook is concerned. And so what do I take it from this then that it's not just going to be Rio Tinto? We're talking all the major miners likely to take part in bumper dividends?
I think so this year, although Glencore's not driven so much by iron ore, it's still enjoying high copper, nickel, and other metals prices. Rio Tinto has the benefit of having a large aluminium business, but I think we should remember that there are inflationary headwinds on the way, and it's always possible the board might have an eye on that. Remember, these companies burn a lot of oil, particularly in trucks, for diesel in trucks, and the oil price has risen a lot recently. So there's some issues they're going to have to deal with, and there's a big focus now on reducing carbon emissions, going green, and so I'm sure some of the funds are going to be redirected into that area to make these companies more efficient and frankly greener.
Does a mining company have to be really large in order to pay a large proportion out to shareholders? I mean, I'm asking this question to find out whether or not we can expect relatively large dividends as well coming through from FTSE 250 mining companies. We know that London is a home for many mining companies, and a lot of mining companies like to list in London because money is freely available for them to raise for their business. So we know London is a good place. Do we expect the mid-cap and possibly also small-cap producers also to bring us good dividends compared to their profits and turnovers?
We see the whole sector benefiting from what's going on. The majors are the guys who are the big iron ore producers. Getting into iron ore is a big boys' game. It's quite difficult for smaller companies to do that, although some have over the years. So the big move in iron ore prices isn't going to affect most of the junior or mid cap market. But remember, other metals prices are also very high, and we have very significant increases in lithium, rare earths, cobalt, other industrial minerals, and of course the base metals. So if we look at tin prices at new high levels, nickel also at a 10-year high. So yes, I think gains are to be made across the board.
It's an interesting point you make as well about the efficiency of these companies in trying to deliver a profit in what is a large inflationary environment of their own, of course, with the high oil prices, as you say, meaning that their costs go up at the same time. Is there much of a move amongst the majors yet to get into what one might regard as a more environmentally friendly mining environment? Do these large companies have any interest that they have at the moment to start to move into areas where their costs could ultimately come down? It is a very expensive thing, isn't it, transitioning into a relatively green type of company. And miners they do tend to have a reputation of not being able to measure up as other areas of investment, the investment community expects in certain areas such as technology and other areas where maybe it's easier and quicker and cheaper for companies to adopt a more environmentally friendly attitude. I get the feeling that miners are pretty much the back of the queue on this. Is that right?
Well, it's interesting because people in the mining sector are generally interested in materials technologies. We're not just interested in producing the metal, we're interested in where it goes and what drives future demand for that. And as a result, the industry has a lot of knowledge in the renewable energy sector, solar, wind power, and fuel cells, for example. And so there are huge initiatives going on. Anglo American is working with electric trucks and hydrogen-driven trucks at the moment. Rio Tinto has been electrifying its iron ore business in Australia for many years now, with electric trains and stuff like that. And a lot of this now is going the next stage to the production of more renewable energy to drive to help drive the electrification. And of course, with oil and gas prices having gone up so much recently, it just gives all the more reason to want to go more that way, to become more self-sufficient in terms of using renewable energy and actually to drive the technology. So, for example, Fortescue Mining, which is a big iron ore producer out of Australia, recently bought into the battery business. So there's big moves going on here, and I think the mining companies are going to transition to some degree into technology companies as well.
You're talking there about the way in which metals companies are benefiting from this, mining companies, and you spoke about the broadening out, not just iron ore, into other areas as well. Battery metals, very important, obviously, as we know from having spoken to you before about all this. How about the precious metals end of the market? We've just witnessed, I think, a new 8-month intraday high for the price of gold. Now, there are a number of reasons as to why gold is going up at the moment. Geopolitics also front and center, of course. But do you see the same things going on for the precious metals miners as well, delivering these large dividends? Historically, of course, these companies benefit from when, in times of stress, when the price of the metal goes up, and their costs, of course, stay relatively low. Do you see precious metals companies also being able to deliver higher and better dividends for investors?
We would expect them to deliver higher dividends than they have in the past, not to the same degree as the guys doing iron ore, but then they've also probably got a better future ahead of them, because we do see iron ore prices pulling back. China isn't going to use quite so much iron ore, I think, in going forwards in the longer term. It's already said it wants to transition into processing more scrap iron rather than the processing of iron ore into steel. So yes, I think investors should be looking to make the move and take the profits from these very big miners into smaller, more nimble businesses that are producing the battery metals that we need for the future. And of course, those battery metals are enjoying extraordinary price rises. The price of lithium now is 10 times what it was a couple of years ago. And we see other metals also doing similar things. So with nickel and tin prices also looking very high.
John, we'll leave it there, but thanks indeed for joining us on that note that things looking particularly good for investors and traders in the mining sector. That's John Meyer from SP Angel. For more videos from us here at IGTV, join us on Twitter at IGCom, Instagram, and subscribe to our YouTube channel.